I was totally surprised by a 65% subscription. What really played out here?
Look, I think first off, let's set the context. This was a $250 million IPO, effectively one of the largest in the region, actually coming very close to nothing close to what I guess we've seen in Safaricom, but still a very significant quantum being raised via a public offer in an environment where the pandemic is still ongoing. There are still other nuances around the liquidity environment, even at a more global level, that do affect the performance of issuances in African markets. So 65% uptake, while obviously not being 100, is still positive. And I think the lens to look at it is that first of all, the idea was, I guess, to broaden the shareholding of the company, both at an institutional and retail level. It's come at an incredibly difficult time, but at the same time, I think it's been a positive uptake, given close to $150 million was still taken up through the offering. I think the other thing to remember, I think also Ugandan as a market, the level of retail participation there is much lower than we've seen elsewhere. For example, in Kenya, the number of CDS accounts that came in through the IPO was just above 21,000. I think that in comparison also tells you there's a level of development that has to continue, but I think this is the work that has to be put in. I think it's not fair to say we shouldn't list businesses, or we should not encourage issuers to list, even though there's obviously that risk. And we only do these things by effectively testing the market. So by that lens, I think you can say we have, truly speaking, done something positive for the markets, also considering it's effectively the largest IPO that Uganda has seen. Also within the region, it's also a significant issuance by all means.
But Greg, to counter your narrative in terms of the quantum, and this is something I've shared with you before, running parallel to this was the MTC IPO in Namibia, where the state-led telco was a stake was being divested, seeking to raise $212 million. They didn't hit 100%, but they hit 81%. So much as we would like to say the quantum is huge, I mean, on a relative basis, we've seen fairly better performance elsewhere.
Yeah, I mean, each issuance will have its own nuances. I think the point I was trying to make is that while it's not full subscription, there has been positive things that we can unpack from the participation that we've seen, both from local and retail investor base. I think in essence, we see a uptake that was quite considerable from an institutional side, but I think a lot of work has to be done continuously on retail, and also bringing more institutional investors to participate in these issuances, especially regional institutional investors. I think you know that at the moment it's been quite tough in terms of disposable incomes, particularly at the retail level. We also have to continue to attract foreign capital to come into our markets, and I think these are the things we have to. These are the levers we need to pull for the development of the regional capital markets.
So Greg, just latching on to my second question, really. So this year we've had 2 telco IPOs in this continent. None of them has punched within its capacity in terms of subscription. Is there a broader underlying issues which goes beyond the geographical scope of Uganda or Namibia here?
I think the broader theme that you will see probably playing out, not just here, but elsewhere in sub-Saharan Africa, and perhaps even further afield in other frontier markets, is that, obviously liquidity these days is a major concern for international investors, and they have expectations regarding the minimum liquidity they expect in terms of a market cap and even the projected average daily trading volumes in these markets, in order to ensure that they are able to trade in and out, particularly these days when redemptions are also somewhat of a concern. within the international investor community. So I think those are the themes that we've seen playing out broadly. But I think obviously there are country-specific nuances that you will see. But I think it's important to remember that picture, that it's the global investors who also drive the appetite that we do see from a broader institutional level.
Greg, give us a sense of the disaggregation in terms of participation between retail and institutional investors in this issuance.
No, so retail would be 10%. The bulk of it was institutional at 90%. That was the makeup of the applications.
And then there was a sweetener here for East African participation in terms of bonus shares. To what extent do you think it moved the needle as far as participation in this is concerned? And what sort of appetite did you see from Kenya in particular?
No, I think the main impact came from, in terms of regional participation, was effectively Kenyan participation, which was close to, I believe, 9-10%. It was around 9-10%. That's really the contribution that we saw. Remember, this was broadly a Ugandan. It was targeted for a Ugandan issuance, which was 87% of participation. So in terms of the balance of 13%, 9% was Kenya. The balance was international.
When I was looking at the IM, I had a challenge when I looked at the debt levels of the company. I mean, granted, the ratios still look good, but the extent to which it has been ramped up over a 5-year period got me a bit concerned. Could this have been a turn-off for investors in your view?
No, I don't think so. I don't know. I think usually investors, and you'll see sophisticated investors also participated, and they're able to discern whether it's an appropriate level of indebtedness. I think usually investors will also assess corporate indebtedness through various metrics. And for instance, you look at the debt to EBITDA ratios, and if your level of a free cash flow generation is sufficient for you to more than cover your debt obligations, and that should be usually that is what they use to evaluate that. And I don't think it was a major issue. Effectively, I think debt is also it's also an efficient way to fund operations, but I don't think that was one of the major concerns. In any case, it always has to be looked relative to the size of the business, not necessarily just the size of debt. And I think from the discussions we were having with investors, that wasn't a major concern.
Some have argued that this issuance needed more time, maybe extended by a week or two, and it would have attracted a lot more appetite. Your thoughts on this?
Probably. I mean, in theory, maybe it could have helped bring on board more participation. But again, I think sometimes you have to work with what you have in terms of timelines. I think we did what we could within the time allocated, and there was a significant campaign to obviously educate investors on the process and the timelines that were set in terms of the milestones for the IPO process. So in theory, maybe could have helped, but I think in the end, the participation that came through was quite positive within the timelines.
Greg, my final question: what next for this issuance? Are we looking at a secondary issuance, or how will this unfold?
No, I can't speak too much about that. Obviously, I guess there's the advisors in Uganda, and the regulators will have to get together and see what's the way forward. So there's nothing yet that I can speak to about the future, but I think for now we can comfortably say the shares will be listed, and investors will start trading. But I think the future remains, your guess is as good as mine on what will happen in the future at this point in time.